And we're live. Roy, how do you feel when Catherine says the best show is about to start?
I mean, that's just facts right there. So,
Best show of the week, Harry says. Heck yeah, guys.
yeah,
On
yeah.
a
Because of
Friday.
my schedule, we couldn't make Tuesday work, and because of my schedule, we can't go super long today. But we wanted to still do a show today. By the way, I won't be there tonight, but it's still worth tuning in to the. Oh man, what are we calling it? Um,
The Ron
stock
and Trev?
Stock Market Unfiltered show that's coming up. Tevis and Steve will be doing that one, so be sure to tune in for that one. But we are here for Bootleg Weekly, even though it's going to be a little bit shorter. We're still going to try to sneak Q&A in before we close. We have a lot to talk about. Tevis earnings from Nbis was this week. Robinhood, we've got a CPI read, inflation read. The markets have been incredibly volatile. Aehr had some big news. We got him stuff to talk about and a whole lot more. And as always, thank you guys for being with us tonight. Tevis, where do you want to start?
Let's start at that amazing blazer. I feel underdressed. You should have let me know. But yeah, dude, we've had some nice earnings this week. I think Hood is definitely one that I want to talk about. I haven't had a real chance to dive super deep into Hood earnings, but I know you have. And then I actually just finished recording a video an hour ago about Nebius, which is going to come out later tonight about their earnings. So their numbers are sort of top of mind right now. I think we can also just cover some of the smaller topics. Maybe let's start with Hood and then jump into some smaller topics, and then we can just jump into Nebius a little bit later on. How does that sound?
Yeah. Yeah, for Robinhood, like the thing to know is right now it's just trading relative to what's happening in crypto. And it's done this in the past. The thing that's kind of interesting is we can see that they've really moved away from crypto as a significant source of their revenue. Let me pull up. You know what tool I'm going to pull up?
Fiscal.ai, not
Yes, of
sponsored.
course. Yeah. All right. So let's look at options revenue, cryptocurrency revenue, equities. Oops. Let me remove the percent change because we don't need to do that. Equities, other, and actually we could just do, yeah, net interest. And we'll stack the bars real quick. And we'll put it on the quarterly standpoint. Okay, so what we're looking at here basically is Robinhood revenue. And this you can see, oh boy, quarter over quarter is flat. That's not really a significant deal. It's the year over year that matters. And this is a business that is really accelerated on some fronts. Options, of course, has done very well recently, but really predictions market is what's keeping this revenue up. But if you look at cryptocurrencies, let's see. It's still a significant chunk of their revenue at 221 million. But if you look at to where they were, like we'd have to go a ways back. Now this is a lot smaller number. That's in 2021. That was a meaningful source of their revenue versus where this is at. We're off more than 50% off the peak for Robinhood, and yet this makes up, I believe, 17% of their revenue. So it's still important, but if crypto went to zero, they're still growing quite rapidly. I think the biggest thing that beyond just the tie into crypto that's kind of impacting Robinhood is, for whatever reason, people love to hate this company. I don't know if you're aware of that, but I was, of course, pounding the table early with a lot of guys. And anytime we did, people were like, "Oh, it's terrible, fake companies, scammers, whatever." Sentiment has changed because I mean, like, this is a generational company. I've not added, but there's part of what's happening too is a pushback on prediction markets. That pretty much no matter how much revenue they've posted there, the market's like, oh, but predictions market, it's sketchy because it's in the app for some reason. Even though it seems like Robinhood, and I guess Kalshi and Polymarket too, but really, maybe it's because of the volume, but I think it's because people love to hate this company. I don't see people complaining about it in like Webull, for instance. And I pulled up my Webull app. I'm like, boom, it's like right there. The first thing you see, it's an annoying pop-up.
Yep.
It's whatever. But anyway, they did add an option to be able to remove it. You could always chat in and take like 2 or 3 minutes and have it removed permanently if you wanted to. But like the big thing with the Robinhood is this is a company that executes well. They have an event, of course, coming up early next month. They'll have 4 of these this year. If you look at what they're shipping out, like actually some of what they're doing is building a couple of platforms. We'll have to see what it looks like. But platform revenue is always one of those good things. If you want to make your business less cyclical and less dependent on just what's happening in the macro space. It's still cyclical though. So, Tevis, do you still own some Robinhood or?
I do, yeah.
Yeah.
And I am not against doubling down here in the $70 range. Um, Quite frankly, I mean, look, it's easy to hate on the prediction markets, but I think they're going to be one of the biggest pieces of the narrative. I know Vlad was also talking about tokenization this week, like more extensively. Um, did you see the? I don't know if I can pull it up in time, but did you see the Super Bowl numbers? Like Robinhood and Kalshi and Polymarket completely smoked the traditional like Vegas from a volume perspective. And if that's not an indication for you, I don't know what will be, because to me, that was a very clear trend reversal around like, okay, prediction markets have time and again proven that they are a superior product offering. And in a perfect market, the best product wins. And so I think that is going to serve very well. I think it's goodwill, the fact that they allowed people to turn it off. That's just a little bit of fan service to people who are complaining about that kind of stuff. But yeah, prediction markets, like just the surge in the revenue that we're seeing, even quarter over quarter, it's very promising for the future.
Yeah, and this can also always go lower too. Like if this is crypto winter, we stay in it for a while, um, just because that's Robinhood's associated with that. That's an opportunity, honestly, for an entry or a bigger position. Myself, like if they go to $60, that's kind of what I've targeted in my mind, and we'll see what happens. No guarantees that we're there, but we're at 75.95 right now. That's where I'd actually look at adding, and I may do that through Leaps. Now I don't have a ton of cash available, so I'll have to figure out what to do there. But yeah, it's kind of hard when it's your largest position. It's free falling, and it's like, well, I wouldn't mind adding it, even though it's still my largest position, but it can fall further. I only have so much cash, so and it's still like if I didn't have a position at all, I'd be buying all I could right now.
Yeah, I think the cash part is the problem that I need to solve, because I have a bunch of stuff to buy, and I need cash as collateral for cash secured puts, and everything is cheap all at once. So I think
Except for
that's
Crocs. Have you
yeah,
seen what happened with Crocs?
I did, yeah. They reported
Yeah,
earnings and they popped like 20% or something.
reported
Great.
earnings had a miss, and it's like, all right, Crocs to the moon. And it's like, okay. I mean, it's not a bad company, but and AI probably won't displace footwear, but I guess it's going to kill everything else. So
Dude, what I saw the stat this week. It was like Walmart is trading at like double the valuation of Amazon. Something crazy. Like, what is the rotation is crazy.
yeah, it's like I think to the downside, there's been a lot of names that have just fallen further than they should. Like Robinhood's one of those, but there's a bunch actually at this point, and a lot that I don't even own. And at the same time, it's kind of weird because there are some. It's like the opposite of 2023, where everything related to AI was just pumping and doing ridiculously. And same with crypto. Now it's if you're associated with crypto or if you have anything to do with AI, it doesn't matter. You shoot first and ask questions later, and that's what's happening. So, I mean, it's kind of astonishing. But if you're traders, that's terrible. If you're in leverage, that's really painful. If you don't have any cash to add at all, that's frustrating. But ultimately, if you're a long-term investor, and let's say this market remains irrational for months, I mean, that's not great. I don't think that's going to happen, but 5 or 6 months, that gives you meaningful time to carve out some of these positions, fill them out rather, at really good valuations. And there's a lot of opportunities out there in the market.
Yeah. And honestly, like I have a short list of things that are interesting for me to keep an eye on that I'm not in. And there's some attractive prices across the board. And I think that's one of our topics tonight is separating the good from the bad in terms of what's been beaten down rightfully so and wrongfully so. Because a lot of names that were darlings in 2025 are completely discarded in 2026, at least for the first little while. Um, and we'll
One
talk
of
about that.
those Yeah, one of those that I think maybe we'll talk about next here is hymns. So
Yeah.
Hims did get sued officially. They've been sued by Novo Nordisk. Of course, they had released a pill that was a copycat pill of what the Wegovy was as far as the oral pill last week. And both you and I, and actually many other Hims bulls, were scratching our heads and saying, "Okay, why? Why are
Yep.
they doing this? Because this seems like it's just inviting a lawsuit." And we saw the FDA just respond, the DOJ as well, before the weekend closed, and of course the lawsuit hit as well. Now, I got out fully on Friday. I have a video kind of outlining that. You've reduced a lot of your position. Do you still have some, Tevis?
I still have some. I've reduced like 70% of my position, something like that. Um, and I think the last 30% I'm keeping just through earnings. But yeah, I'm not super happy about it. They like I think with regards to him. So okay, so here's the sort of framing with hymns. Okay, um, management is making poor decisions. Management basically provoked themselves into a lawsuit. Um, the regulatory risk is a big deal, um, and it calls into question the trustworthiness of management to steer through the storm with shareholder interests in mind. They pulled back immediately as soon as the FDA was like, "Hey, we're going to sue you guys," um, or Nova was, and now like they're offering discounts on stuff, and it just seems like they're spiraling a little bit from a decision making perspective. However, the thing that makes it compelling is, as of this recording, Hims is, a $3.7 billion company. They're profitable. They're growing. They have cash on hand. And from a valuation perspective, like if I only showed you the last quarter earnings report without any news around what's going on this quarter, you'd be like, holy crap, this is a steal of a deal. Now,
Yeah.
that's the reason ultimately why I'm waiting with the remaining sort of 30% of my position, because they're going to be providing full year 2026 guidance when they report earnings. And if that guidance is something that sounds promising, I might even add to my position and see it through. If it's not, or if I don't trust management's ability to execute on that guidance, then I'm probably going to sell out the remaining 30%.
So yeah, it's mostly the guidance, or like if it's just something unbelievable that comes that would get you to exit, or
Yeah, the guidance. I want to know if they hit their numbers for Q4. They provided guidance that was multi years away. I want to sort of do the math backwards with what they provide in 2026, what their initiatives are. Of course, I want them to address the lawsuit on the earnings call. I want them to sort of like address recent events. Um, so, uh,
yeah. Yeah, that's one that even though I'm out completely, I'll still be looking at just because I'm kind of curious. But also, unlike with PayPal, I think that the thesis is just completely broken. That yeah, the valuation is stupid still, but I'm out, and I won't get back in unless there's a compelling reason to do so. And I don't think that there ever will be. But with Hims, I don't know that the thesis is broken. What it was is, all the things that you said, and they stumbled along the way at the same time as there are some ridiculous screaming buys, at least in my mind, in the market. And only having so much money, it's like, okay, if I rate, a scale of 1 to 10, like the opportunity of Hims, and like a 4, why would I not take some of that money and put it in an 8 like Nbis? And so that's what I ended up doing on last Friday. Thankfully, it's $23, so it was at a higher amount. And thankfully, Tevis, for both you and I, we took a lot of profit in this name previously.
yeah,
So, like, even if I hadn't sold out on Friday and all that remaining position went to zero, still up massively, which is really nice. It's kind of the importance of taking profits and not getting too mad when your covered calls, which are deeply in the money, you've made a lot of money on, that they go goodbye. Like that was part of the selling too. But yeah, I don't think anything near term could get me back in the name right now, even though it is cheap, especially if they execute well. But that's a question mark in my mind: is the execution? Have they stumbled? Are they pushing this pill, or did they push this pill because they're so desperate for revenue and improving on that front, especially against a headwind of GLP-1s, that they're doing stupid, irrational things that make no sense. I have no idea how, if you look at their board, like they have a lot of people that used to be on the FDA or in major pharma companies. Was the board not consulted? Were they? And they're just like, well, we're toast if we don't do this, so let's just do it anyway, and we'll just hope for the best. I don't know, but it's very concerning, and so enough that I'm like, hey, this is murky. There's very clear calls, and now I'm up Nbis and not so much up Hims. Out. And on Nbis, do you want to go there next?
We can. Yeah. I mean, I think, yeah, a very different story with Nebius, like the growth and the decision making from uh, the management team, I think is very, very misunderstood by the market right now. I mean, I was covering them live on their earnings yesterday morning, and just to see what they're guiding for is incredible. They're beating out on all of their major targets that they're putting for the company, like connected power, contracted power, 16 data centers year end 2026, 240 megawatt data center in the North France. Three, I believe, no, sorry, two wholly owned data centers in the US, and three or four data centers that have over 100 megawatts in the US. 16 to $20 billion of capex, 40% adjusted EBITDA margins, up from 24% in Q4. They're guiding for just incredible execution across the board. And in fact, I think they're going to beat those numbers. I think a lot of those numbers are sandbag numbers for them. So they're they have already begun servicing the Microsoft and the Meta deals, deferring some of that revenue out. 60% of that 16 to 20 billion in capex are going to be financing themselves from cash on hand in their balance sheet. Yeah, man, there's like we can touch base anywhere on Hims or on Nebius, and I was very excited by their earnings. I think the market didn't really understand because it was like a double miss from analyst estimates, which is kind of silly.
Yeah.
Algo sold it off in the morning, but it regained a lot of those throughout the day and during the call. So very bullish. It's my second largest position.
Yeah, I really wish my $70 cash secure puts filled, but I bought anyway on Friday. I bought some on Monday too. Just like, hey, I wanted this name. I think it's a very high quality company. The other thing that was interesting is just well, I mean, like it's kind of interesting that the market doesn't really understand what's happening here. Like the reason why they miss is not because of anything internal. It's just analysts don't really understand. And it's funny, like they sold out capacity and yet they miss on revenue. It's like, guys, you're obviously pricing something incorrectly. Now, one other thing with Nbis too is, of course, they have announced that acquisition last week, and then we saw. I don't know if you saw this, Tevis. This is something that they posted here this afternoon, but they have a Builder Hour token factory all about AI agents, and this is really the direction that they're trying to go, away from just largely being a bare metal supplier for data centers, but instead actually developing a credible AI cloud. Now, the large hyperscalers, maybe they'll use this, with certain deals, but a lot of this is going to go to other businesses that just don't have the internal capability to do these things themselves. That's one of the things that's kind of missing in the anti-software narrative, and this isn't about software necessarily, not shipping out software, so to speak, but small and mid-sized businesses are not going to be creating through vibe code their own software to run on. That's just not the reality that we're in for the most part, outside of rare exceptions. So I think Nebius is going to really benefit from that reality, in addition to everything else that they're building. So it'll be interesting to keep an eye on that. But yeah, I like the report. There's a lot of stuff that I think this is the second earnings that I've actually followed and looked at for Nebius. So there's a lot of stuff that I need to go back in and dig through, and there's some things I have questions on. So I'm not going to do a earnings review or anything, because I'm like, I swung trade it before, looked at it for a little while, and I'm like, hey, I need to get a little bit more familiar with this as well. But yeah, it's exciting. Yeah, I mean, I'll add to Nebius some. It's just like it's a hard market in a very different way than it was 5 months ago, where there was very few really good buys in the market. Now there's a whole lot, and it's just a question like SoFi right now, should it be trading where it's at?
Yeah.
Absolutely not. Robinhood, should it be trading where it's at? Absolutely not. Palantir, is there a chance that it falls to like $100 or a little bit north? And I'm like wanting to buy a lot more there. Yeah, there's a possibility. And you can go name after name. I mean, we could look at like software like Monday or Duolingo as well, which are, I'm not in either of those. I don't think I want to get into either of those, but like, man.
Yeah. Um, Yeah, I mean, honestly, man, like I think one of the more exciting pieces for Nebius for me was that not only are they expanding their data centers from 7 to 16, but also they're guiding for those data centers to be operational by the end of 2026. You know what I'm saying? Like we don't even have to wait for a year for full build out. like
Oh, yeah.
so we can start to model in some of those data centers, not all of them, but some of them for sure, to be producing, revenue towards the back half of this year. I think I don't know. My price target on Nebius still stands at $200. I think the market is definitely not knowing how to value Nebius right now, or calling BS on what they're guiding for, and there's no real reason to do that because similar to SoFi, they've like beaten on all of their capacity guidance estimates and their ARR estimates. And so I think there's a lot of positive momentum. I think they're also going to sign another hyperscaler. Like the 7 to 9 billion in ARR is not
Oh,
accounting
yeah.
for a new hyperscaler. Uh,
Yeah, like even then they still have to build out capacity. So like they may hit the top end or even exceed that a little bit, but yeah, it takes time to build things. It was kind of interesting. The CapEx was actually down a little bit in quarter four. Was there anything in the quarter that gave some color on that, or was it maybe just the timing of um, certain buys for the
they didn't
CapEx?
comment on it, to my knowledge, on the call. Might have been like timing delays, or something not
Yeah,
on schedule or something like that. I didn't really read too much into it because they beat on the capacity side of things, like the available capacity, the 170 megawatts relative to 100 megawatts that they have guided for. Like they're beating on the numbers that result from their build out, you know? So yeah, like Nate says, it might have just been a timing thing.
yeah, yeah. Okay, so Bashirul asked at 522, can you guys explain why Nebius is better than Iron and CoreWeave? I mean, for me, part of it is like I understand the company a lot more than Iron. Iron is, I think, decent, and they're doing an okay job of pivoting away. I think probably a very good job away from being a pure Bitcoin miner. I've never liked pure miners. I've traded them before. I don't want to own them permanently. They're moving away from that. There's some overhang on them just because of Bitcoin and still being a miner. I mean, that's most of what their business is. And I've liked them better than Corey, but I also know them a lot better. For you, Tevis, like you know these names, you know Nebius a lot better than I do. Nate, feel free to chime in as well. Like I don't think any of them are bad, and I think honestly, Inference it's going to have multiple winners. So it's not a Nebius is amazing and Iron's going to zero, Corey's going to zero. But yeah, Matt said it. Vertical integration, and then for Nebius as well. Like I really like what they've been building out. As
Mhm.
far as the cloud layer, the AI cloud layer specifically, the token factory that they'll be talking about, I think they're positioned well for that. The last little thing, and this is a small thing, and I know a lot of Nebius bulls don't really care about this and don't agree. It's not an American company, and what's happening in Europe is kind of an anti-U.S. tech wave. I think that also benefits Nebius. Like they're well positioned here in the U.S. A lot of their business is focused in the U.S., but they're also going to benefit from that as well.
Yeah, management team, vertical integration. I think the software side is also a differentiating factor, especially with the recent acquisition of Tavaly. I think that's going to only accelerate their software offerings, like Token Factory and the Cloud 3.1, and all of these different um, initiatives. Uh,
Yeah.
So that's
And
why,
like,
and like also subsidiaries, right?
yeah, I was gonna say like ClickHouse you can't sleep on, and there's some other nice ones too, but like ClickHouse is really the main one. Really good investment for them, and it just integrates well with what they're doing as well. So
Yeah,
yeah,
one question I wanted to bring up here, and maybe this can go into our next topic, Roy, but like, um, it's the unrealized capital gains tax in Netherlands, right? Because as we know, Nbis is headquartered in the Netherlands.
yeah,
Um, and this is, I mean, let's just cover it as a topic and then talk about if there is any implications. But basically, what happened was, hold on, I think I made a post about this. What happened was the Dutch Parliament had approved unrealized capital gains, unrealized capital gains tax. Let me throw up this comment. And so this dude, the Dutch Parliament member, explained how this deteriorates capital. So 36% unrealized capital gain tax. So let's just say you own 500 shares worth 50,000 euros, and that doubles within the course of a year. You have 50,000 unrealized profit, right? You didn't sell, but for tax purposes, the 50,000 in unrealized profit that you have is treated as income. You get a small exemption, but essentially the tax rate is 36%. So you get a $16,700 tax bill for your unrealized gains. The bill is due in May, even though you never sold anything. The market then falls in this example of like how crazy this is. The market then falls, and your investment falls from 100K to 60K. So the 50,000 unrealized euros in gains now drops to 10,000. Your portfolio is no longer worth 100,000, it's worth 60,000, but the tax bill is still at 16,000 because it's based on the January 1st valuation. So you must sell your shares to pay your taxes to raise the 16,000. If you sell your shares, you still have to pay taxes on the realized capital gains in order to pay taxes for the unrealized capital gains. Originally, you had 500 shares. Now you have 360 shares left. You're forced to sell 140 shares to pay off your tax bill. And your paper gain was 50,000. After this correction, your paper gain mostly has gone away. The real gain is only 10,000, but you paid 16,000 in tax. So essentially, it's like probably one of the most absurd things I've ever seen.
yeah.
Especially because this is not like a 3% or a 4%. It's 36%. 36% is a very big number for unrealized capital gains.
Yeah, it's such a mistake. Like in the United States, I know some have talked about doing this as well, and instead, thankfully, we've gone the other direction with the Invest America or Trump accounts, whatever they're called now. I think legally they're Trump accounts, whatever. The more people that actually participate in the market benefit from that, and it gives you some buy-in as far as the capitalism as an economic system. But when you start taxing unrealized gains like this, just like you've noted, like thankfully it's just the Netherlands, so it's not widespread. I'm sure politicians will try to bring this into their companies, but our countries. But if we see disaster over there, capital flight, and people leaving or just ditching the market entirely, impacting some of the companies that are in the Netherlands, and there's several good ones. Like Adyen is another one that's very good. Now, the good thing is for Nbis and for Adyen and others that are based there, a significant amount of their base is not in the Netherlands. The one thing that I'm kind of curious about is I don't know if this tax, and maybe you know, Tevis, hits those that are insiders that work for a company that have a massive amount of shares. If they do, and if they're like based in Netherlands, and that's the way that the law falls, that is definitely something to watch out for. But yeah, it's madness.
Well, it's madness because like you would have to pay every single year for this tax. Like, let's say let's say I'm an engineer and I'm working at Nebius, right? My shares vest on a yearly basis, and every single year I would have to essentially on January 1st, it's like, okay, what's your unrealized gain this year? You know, um, And then how does it work for private companies? Like, okay, let's say there's a liquidity event or something like this, and we raise a new Series C for a smaller company, and I don't sell my shares, but technically on paper, my shares increased because it's now the new valuation for when we raised money. I would have to pay out of pocket for that in a market that's not liquid. I can't sell my shares. Like it's just it's absolute insanity. Like at what point do people say, okay, enough is enough with this? Like this is not. I mean, the first thing you're going to get is you're going to get capital flight,
Mhm.
absolutely capital flight. Um, every dollar, and I'm sure there's an exit tax in the Netherlands, so they're going to try to screw you on that too. But you're definitely not going to get new businesses starting there. You're definitely going to not get new investors, wanting to invest in the Netherlands. It's just like it's ridiculous, man. And I think Nate also, said it here. Like, do we think Nebius moves headquarters? And I could totally see them doing that. Why
They
not?
easily could. Yeah, it's not that they're in Netherlands because that's where they're from. I mean, these are not everybody, but a lot of them are Russians. So, uh, yeah, it'll be. I mean, maybe they come over here to the United States. I
Why
wouldn't
not?
mind that. But we'll have to see. Like if them being positioned as a European company is that they see it as incredibly beneficial, maybe they'll see something like the UK instead. There's a lot of options, honestly. So, uh, yeah, hopefully we don't see that in the States, or I think more likely Canada. I would be a little more conservative if I were you. But yeah, regardless. Let's talk just a little bit more on some of the other headline stuff. So, do you want to do a little bit on Lemonade and talk about what you're seeing there? Of course, it's retrace like many stocks. It's kind of a recurring theme. Growth is apparently terrible right now. It's really what's just happening is multiple compression. But they've retraced quite a bit. There's been some pretty exciting developments for Lemonade. Tevis, where are you at on the ticker? What's happening, and what are you thinking?
Yeah. So I sold my lemonade position, and I sold it in December. And when I sold it, it was like 75 bucks or something like this. I sold it through covered calls. Of course, I got into Lemonade at 18 was my lowest buy, but that was super small. But my average was around like 30, 32. So I doubled up my money in Lemonade and then sold it. Um, but now it's under the price where I sold it at. And so the business signed, a great deal with Tesla. Uh, they're absolutely crushing it here. Let me throw it up on screen. Um, Lemonade is down 33% in the last 3 weeks, considering they just announced that when Tesla FSD is active, insurance prices drop by 50%. This is the ultimate validation of the thesis. It proves the power of being an AI native company. They can lower premiums because AI allows them to scale without increasing OpEx. More customers is not more employees. Like you can have some operating leverage there. Incumbents cannot cut premiums without destroying margins, even if autonomous driving eliminated accidents entirely, because they're not AI native. More customers means more staff and higher costs and ultimately lower profitability. Lemonade remains one of the biggest opportunities in the market. And so you can see the in-force premium continuing to climb for Lemonade, and the OpEx staying relatively flat. So all of this thing in between is the operating leverage that they have. Business is essentially executing very well. And I think that partnership with Tesla, especially if we get robotaxis on the street expanded to more states, is going to yield benefit for them. And yet, I mean, Lemonade is what in the $60 range, 63, 64. I think last time I checked, it might be a little bit higher now, but $63. And so the way that I'm thinking about this is like, well, I sold Lemonade in December and I sold it around, 76, 75, something like that. It went all the way up to $99. And now it's back down to $63 and they have better news out.
Yeah.
So do
Yeah,
I want to
that's
get back into Lemonade? That's the question.
it is interesting. It's one of those that I don't think that I'll ever get into personally, but like I do kind of see it. There's just it's just not a business that I want to be in, but like they're pretty well positioned. Like the news with Tesla was really, really interesting. They're growing on all fronts. And I'm very much rooting for them because insurance, especially vehicle insurance, has been just a pain to deal with, honestly. But I speak from experiences. We now have our sons are now in their 20s, but when they were teenagers, like that just killed our premium. And a lot of places that we lived, we just didn't have that many choices for auto insurance. So it's just great that somebody's coming in and perhaps disrupting the space, even beyond an investment standpoint.
I mean, granted, they're a small company, right? They're under $5 billion, and there's a lot of growth ahead. The insurance total addressable market is massive, and I mean, we'll see. Um, we'll see what ends up happening with them. There's too many things that I want to buy, and there's not enough money for me to do that.
Yeah. Yeah, Matthew asked, since I own Teslas, am I going to use Lemonade? Previously, when I was doing insurance, I don't think Lemonade had gotten to Texas yet. I may be mistaken, but at least when I looked, maybe I did something wrong. That wasn't the case. I use Tesla insurance. It's not perfect, but it's pretty decent. It's a lot cheaper than what our other insurer was. I will have to look, though, just to price things out. Usually there's a certain time of year where we look at and relook at all of our contracts like that for insurance, home insurance, not so much for health insurance, but yeah. So I'll take a look. It's nice to have options. Aehr test systems. Are you ready to move on to that one? And I just want to touch that one real quick.
Yes, I just want to very quickly touch on just answer Nate's question. He's asking what's their growth rate for Lemonade. So this is just their shareholder letter for Q3, Nate. They're growing their in-force premium by 30% and their customers by about 24%. And as you can see, I mean, Lemonade is still operating at a net loss, but in 2026, that's going to totally flip around. You can see the gross profit here and the profit margins. So all the metrics are increasing. Gross profit increased 113%. In-force premium, the top line essentially grew 30%. The gross loss ratio improved 11 percentage points to 62% year over year. Net loss as a percentage of the GEP, I think that's gross earned premium, something like this, is up. So there's going to come a point at some point this year where the market is going to start to realize, oh, wait a minute, this company is actually growing really quickly, and they're going to have the AI advantage become more and more evident. 8 quarters of in-force premium growth acceleration alongside sustained gross loss ratio improvement yields, nearly quadrupling in gross profit. So anyways, Lemonade, we'll have to see what the earnings is going to yield, but I think the company is doing very well, and I think it entered my radar again because the stock is down.
Yeah,
but
I mean,
let's
like
move on
that's
to
happened on a number of names. Cloudflare is really the only one that's really just rocketed the other way of names that are walking. I saw like a question on Figure. Figure's attractive, I think here. They're not really impacted by crypto the way the market seems to think. They're like, oh, they have something to do with crypto. Bitcoin's down, that must kill them. It's like, it has nothing to do with them, or almost nothing. But one name that has actually done quite well that was very volatile this week was Aehr Test Systems, AEHR. And essentially what happened is that they announced a major contract. This is something that the CEO, Gain Erickson, had talked about in the earnings a month and a half ago. He said, hey, I talked to a major hyperscaler. They're already a customer of ours. They say that they're going to give us some pretty massive orders. Here's what we forecast bookings will look like. And so it's one thing to say, hey, these are what potential bookings are, versus actually have a press release. It's like, okay, it's actually here. Now, we don't know the size of the order, but Aehr Test Systems, as an automatic testing equipment provider, has pretty lumpy revenue, but this is for their package part burn-in, their Sonoma unit. So it's basically the second highest price, second highest margin product that they offer. It's the second furthest upstream too. It's not quite at the wafer level like Fox XP, but significantly, one of the quotes that was there, well, I'll just pull it up so people can read it too while it's on here. And I did a full video on this too, but initial was kind of the key word. You're going to see it here, if you could throw that up. This customer's this is from that press release from the CEO. This customer's current generation AI processor is already ramping volume production today, and they are forecasting a very large expansion of Sonoma system purchases. That's what they bought here for that device in the second half of calendar 2026 and continuing into 2027. Importantly, we expect these future system orders to run in parallel with volume deployment of this next generation processor, significantly expanding our installed base and long-term consumable opportunity with this customer. And of course, it went a lot higher than 30. Then it crashed the other day, and now it's up close to 30. So this is probably Google. There's a lot of indications that it could be Meta. I mean, it could be Amazon, but I think most likely it's Google. Just there's a lot of facts that kind of fit there. This is basically one of several follow-on orders that they expect to have, and that's why they've talked about this and what it'll do in terms of revenue and bookings over the next really a little bit more than a year. Now, there's a lot of other things that are happening in the space beyond just this still that I think the Aehr test systems will benefit from. But this was the easiest layup, I think, out there. It's one of the reasons why I didn't mind having such a large sizing on Aehr. I messaged Tevis, by the way, I think it was yesterday. And or no, it was the day before yesterday. I'm like, okay, if there's like one more day like this for Aehr and Robinhood kind of stays flat or goes down again, Aehr actually becomes temporarily my largest holding. Now, it's down from like 35 or wherever what I said at that point. But I mean, there is a scenario where we see something like that. And I'll take some gains, even though I think there's higher upside, just because it's a micro cap. I mean, this thing is volatile in both directions. And it dumping on Thursday, just macro driven, and then traders who piled in with massive amounts of volume getting out. That'll happen anytime in any micro cap, regardless of the catalyst. People like to take profit, and I don't blame them. Anyway, yeah, validation of the thesis. Tevis, I'm glad that you're on the Aehr rocket with me, that you're a fellow Airhead. But yeah, I think there's a lot more to go. People ask me if I had taken profits there, and I'm like, no, I actually sold a single one, covered call at $40. Had there been 50s available for next Friday, I would have bought or sold more, but they didn't have it. So yeah, Aehr doesn't name that large customer. It's pretty common in this type of business. It's based on the customer preferences. If the customer themselves are like, yeah, we want you to name us, but there's really not much of a benefit from that. So like if they see that Aehr has some technology and the package part burn-in, the Sonoma units is very credible, but especially the Fox XP units that do the wafer level, and it's helping as far as our testing equipment to increase throughput, to have more reliable testing at a fraction of the cost. The last thing that they want to do is just publish that out for their competition and say, hey, competitors, we're going with these guys. And then 3 months later, when you see, or 6 months later, how it's impacting their chain, then all of a sudden they get into, because then you lose that advantage. So that's just kind of the nature of this business.
And, I think it's crazy, the volatility, because it's such a small market cap. Like it went up 33% in a single day, and then it went down like 29% the next day. And it's like, Roy was like, I messaged him and I was like, hey, should I cut some of these short-term calls that I have on Aehr? And Roy was like, yeah, cut them and then buy shares. And I said, okay, tomorrow I put a little calendar reminder for myself at 9:30 a.m. Cut your Aehr calls, book in your profits, buy shares. And I couldn't even do that because the next day it was down 20%. And I said to Roy, I was like, hey, like, what's a good level for me to continue accumulating? And he's like, if it gets down to 28 again, that's like the level.
27, but yeah.
And I was like, do you think it can do that? It's at like 36 right now. And he's like, yeah. Literally the exact next day, it just went down straight to that level. It's like, okay.
I expected some. Like I was thinking maybe 10%. Now it came on a day where the macro just was bloody. I didn't see many tickers other than Crocs, because Crocs is going to rule the world one day, go up like that. But yeah, it's volatile. I do let people know too when it's pumping. A lot of times that's what gets people interested. They're like, oh man. You don't have to chase those candles usually on microcaps, just because they have such low volume. As traders exit and take profit, it'll give some of that back as well. What that really is like, if you're like, hey, this is interesting, that's the time to do due diligence and figure out where you're comfortable with. You probably don't want to own as much as a percent as I do in my portfolio, because I mean, like, hey, this thing is stupidly volatile. But I like it. It's so volatile, Tevis, that I've looked a couple of times at options and just buying options. And I'm like, you know what? I'm just going to buy shares. There's not really that much more premium from having the options versus the shares, and they're easy to hold. So,
Wow. Nbis had its largest volume day yesterday since early November. Buyers were in full effect.
oh, yeah, that dip was bought.
That's exciting. Thank you, Tess, for the 3-month membership. Really appreciate that.
All right. Tevis, was there anything else that we haven't hit yet that we want to talk about? Otherwise, we'll pivot to Q&A a little early.
I think XAI, dude, the layoffs. Okay, so there's there's a whole thing now, right? Because there were a whole bunch of people leaving XAI. I don't know how much you know about this story. I threw a couple of posts in the chat for you, but
I saw it. Thank you.
Let me see if I can throw it up here. So this is not looking good for XAI because look at the co-founders here. Pretty much all of them are leaving, and we don't know what to make of this. And we also had news around, X is launching X Money in the next 1 to 2 months for their external beta. Like they're still doing stuff, but really here the Grok team, the co-founders, they're all starting their new stuff. And then, Roy, we also had this news where they laid off nearly 50% of staff, with several teams being completely wiped out. Co-founders departing before the layoffs, probably, as a result of the impending layoffs, multiple departees forming new company. As we know, Elon is not the easiest person in the world to work with. And last thing I'll share, and we can open it up for discussion. This is the most mind-blowing post for me. Twitter's engineering org used to be 2,000 engineers, not quite, the 24,000 that PayPal has. It's now 25 engineers, a few designers and product managers. They got cut down to the bone. And 25 engineers for a company like X is insane. And I think Nikita also posted around the revenue per engineer. Hold on, I think I can find it. It was very recent that he posted. Yeah, here. Team size, Meta 87,000, Microsoft 221,000, Google 190, X 30 people. He also posted the revenue per employee for X, and it was here. Let me bring it up. The revenue per employee per X, because they only have 30 people, is staggering. It is. Get ready for this. $96 million per employee. So I think that's probably the best revenue per employee number you've ever seen in your life. So
yeah, anything above $1 million's like good. So that's actually insane.
Yeah. Okay. So couple of topics there that we can lump into one conversation. The first is, why are all these X co-founders leaving to start their own company? The second is, why is XAI making all of these cuts? And the third is, we know from Twitter that they can run with a complete skeleton crew and still be effective. So does it even matter at the end of the day? Of course, this comes on the back of XAI merging with SpaceX. So, your thoughts?
I mean, like we've seen this at other companies that are similar to XAI. I mean, across the board, maybe not as much as Anthropic, which is kind of a lean business. If you look at OpenAI's employee count, it's kind of extreme seeing the disparity there. But I think part of it is, it's a gold rush, right? And so a lot of these guys that have been working, if it's a tough work environment, which I'm sure that it is, and then they're suddenly offered something very lucrative or what looks like a lucrative opportunity. I mean, it makes sense. Why not leave, try that out as well? And you can make, instead of just very good money, you can have life-altering money at that point. Beyond that, I don't know. I'm kind of curious if we continue to see a lot more of this and a lot more of these models. It feels like, at least to me, that things are crystallizing a little bit. There's been some movement, but We've seen some of the big winners continue to be that. A little bit of weakness with OpenAI, but Anthropic is absolutely killing it. Gemini absolutely is as well. And then there's some that are, of course, lesser known that are maybe not quite as advanced, but yeah, I don't think it's. I think it's something to keep an eye on, especially now that we Tesla shareholders may end up owning, a chunk of that. We'll see.
Well,
We do own, actually. Wasn't there an equity stake that Tesla did? Remind me of the amount.
yeah, 2 billion, I believe it was.
2 billion. Okay, so not a large amount, but yeah.
Um,
And Jensen said some quite positive things too on XAI. So like, just because it's Grok is not always the best. It depends on what you're using it for. What it seems to be happening is that Anthropic is there for coders and somewhat for agents as well. OpenAI is kind of the go-to for a lot of consumers. Gemini is great if you're doing anything that's exposed to Google's ecosystem. It might actually be the best anyway. And XAI, Grok is really, really good. Anything to do with Twitter or social media. So,
yeah.
Or DGen.
Look, I think there's sort of two, schools of thought, let's say, with regards to all these co-founders. And the chat is sort of bringing it up, like, are they cleaning up for the SpaceX IPO, or are they leaving because they don't want to be a part of SpaceX? So I think like one side of it is Elon doesn't think they're moving fast enough, and he's making all these cuts internally, and there's conflict there, and the co-founders are leaving to start their own company without him. So like I think that's definitely one plausible rationale. The other one is that they're just getting fired because they're not deemed effective, or they're not deemed, whatever. And we don't really know, and I don't think we'll really know anytime soon whether they're just getting packaged out, or whether they're just quitting and leaving all this money on the table because, as a result of the SpaceX IPO, they probably got a liquidity event where they could all just sell their shares, and now they're super well capitalized, and they just either don't feel like working, or they feel like starting their own thing, or anything like this. Like, imagine the payout you must have gotten. XAI is what, 3-year-old company, something like that, and it merged at a valuation of what, 150 billion, something crazy. Like, these guys are rich. Meta's absolutely going to try to scalp engineers. We know that to be the case, but it's not unusual for executives, and especially co-founders, to leave after a major liquidity event. It's actually very common.
Yeah. Yeah, well, it's something to keep an eye on for sure. But yeah, I think there'll be a lot of movement around the space. So it's interesting just to see that many people move. I typed in there XAI instead of that. It's Exodus. Exodus. Bad dad joke.
Yeah, I mean, Carl said ex adios.
Yes.
So, I mean, who would not want to be a part of SpaceX? Catherine, like, these guys got options for shares for pennies on the dollar, and probably at a valuation that was like dirt cheap. And so they literally printed hundreds of millions of dollars in 3 years. And if I like, let's say, start a company and I have Elon as my boss, sort of breathing down my neck around every decision, and I have a liquidity event where I can make $100 million, $200 million, $300 million. Do I really care that 300 million is going to become 500 or 600 million if I wait another year? No, I just want to be out there. I want to be doing my own thing, or I want to be just retired, or whatever the case may be. My point is that they made so much that they don't really care to essentially make more. That's how I would be if I were in their shoes. Now, I don't know what they're like. Time will tell if they do start something else. But yeah.
Yeah. I actually had a friend that's an engineer that interviewed with SpaceX, and he ended up not getting offered the job. He wasn't sure he's going to take it either. He has a family, and like, that's the thing is, if you work for an Elon company, and maybe there's exceptions, but you work like a dog. You get paid well, you get treated well, but your life is your work. And people can do that for a while if you're young, if you're single, whatever. If you're in your 40s or 50s, or if you're looking to settle down, have some kids, you'd like to spend some time with them. So, it's not unreasonable that people say, hey, I don't want to do this forever. It's actually very common, especially in the engineering and software engineering world, for people to have a very fruitful 5 to 10 years and then look to slow down at an easier job at some point. Q&A time?
Okay. Yes, Q&A. Oh, actually, one last thing, Roy. On our Fallen Angels list, there was another one that sort of I want to resurface here, and that's our friend Duolingo.
Yeah.
So there was this post, and I'll just read it really quickly, and I'll read my response to both. So Stalker Man said Duol has caught my attention around 120. By the way, Duol right now is at 112. 38% revenue growth, 72% gross margins, zero debt, 29% EBITDA, 50 million plus daily actives, lack of real competition, blah, blah, blah. Revenue growth, 43% CAGR, 202% CAGR in free cash flow, 54% CAGR in daily active users. And they're off like 80% from their highs. And I said, is it becoming too cheap to ignore? It's at a $5 billion market cap. And I said, it's kind of hard to go bankrupt with no debt, over 70% gross margins, top line growing over 38%, and 50 million users. And here's the kicker, Roy. I don't know if you know this. They have $1.12 billion cash on hand, which is 22% of their market cap is cash on hand.
Yeah.
Like,
that's
what?
it. Like we've talked about before, we've done a stock tick episode as well. Let me throw this up just to kind of show you from the valuation standpoint. This is two things. So this orange line is the forward price to earnings. Now that's just an estimate, but if you look here, there was a time, this is back in 2025, where it was trading more cheap, or not actually, it was still up a little bit higher. This is the lowest it's ever been from a forward price to earnings standpoint. Now you might say 28.2 is too much to spend on a forward basis. If you look at the growth rate, maybe not. Now, the other thing is price to sales. Not my favorite measure for a profitable business, but if you're comparing it to itself, it really tells a story, especially given the margins. Yeah, it's really attractive. Like, the hard thing is we're in a market where it's fallen tremendously, but a lot of other stuff has. Now, it kind of started that fall a little bit earlier. If you look at it a year ago, or really just from the peak, it's just obscene, 72% drop. If you go out 3 years, you're barely profitable. 5 years, you're actually negative. That's rough. That's like PayPal rough.
Yep.
But this is not PayPal. Like, growth is not slowing. I don't think, maybe there's a little bit of pushback from AI, but I don't really think that the thesis is broken there. I just don't know. I don't know. There's a lot of opportunities there, but it is very interesting. I'll give you that.
Yeah, like again, it's one of those things where it's just the math makes sense. I don't know necessarily if they're gonna, go to zero, but I just like the business is still doing well, man. Like the perception is fickle and the story changes, in a couple of quarters. They're also doubling down in AI. Like they just hired a VP of AI and they are revamping some of their courses from the ground up to be more AI focused. Like I don't not necessarily know like and like I mean I think Tess might have a good point here. Like don't waste your time. There's so many other opportunities. That might be the
That's
case,
the thing. Yeah.
but like it's crazy, man. Like you're getting such a especially when they have a large portion of cash on hand and they're like profitable and zero debt and all this other stuff. It's just it's getting interesting.
And there's a lot of software names that I think are really interesting here. One of them that we're going to do a stock tank episode on Monday. Correct me if wrong.
Yeah, yes to confirm, but yeah, Monday.
Okay, so yeah, we're looking to confirm. Can I say what it is?
Yeah,
Wix. So it's Manuel that we're hoping to have on. If not Monday, we'll try to figure out a time. It's one that they've authorized buybacks that are half of their market cap. Plus, at least with that company, like it's pretty clear that they're not being disrupted at all by AI. They're actually accelerating. So they're not a. Thank you, Rusty. That's really nice. Very kind. But no, they're interesting. ServiceNow. I know Steve is big on ServiceNow. Like if you're looking at a large cap software company, I think ServiceNow is fine. I don't think AI is going to completely kill that model. I don't think it's going to damage the model even necessarily. A lot of what's happening is just like they've significantly been de-risked. This name and a lot of other software names. Sentiment could still be sour for a long time, but I think that we're going to merge to the other side. Because, I mean, like, some software names perhaps. And there are things like Salesforce where I think that they're really in trouble. They're
Yeah.
not going to zero anytime soon. They'll be around for a long time. But AI is not killing software. Like, people need to understand how organizations work, that even at large organizations, for the most part, they're not designing custom software for themselves, no matter how good or how compelling vibe coding is, except for some rare exceptions. For the most part, they're going to be using software vendors who are using AI to make better and better products as well. So we'll have to see.
Yeah. Also, yeah, Wix, the website builder, surely that's a goner. AI can knock up a basic website. I don't disagree at all. Wix, the core like website builder portion, is not really why I'm interested. I'm interested because they purchased Base 44, and
Yes.
Base 44 is like a vibe coding, platform, and that is growing incredibly quickly. Like, they purchased Base 44 for $80 million, and I think they're going to do 100 million in revenue this year. Base 44 is, and they're just like compounding their top line. So that's
Yeah.
going to be really, really interesting from the Wix story perspective. Not really the website builder portion of the business.
And they're a sub $4 billion valuation. I actually think that they're probably going to be a buyout target more than anything. We've
Yep.
actually seen a number of Israeli firms that are in software get snatched up recently. Of
Yep.
course, Nbis, case in point, the most recent one. So, yeah, Base 44 is like the thesis. It's not the websites. If it was just websites, it'd be like, okay, yeah, I kind of see why it's getting sold off.
Yeah, exactly.
But yeah, I'm not in that. I'm interested. I'm open. I'm open to it, honestly. I think that probably the easiest way to play software is just long term, buy the ETF and just sit back.
Yeah.
But it could still be painful for why it is a falling knife right now.
And honestly, man, like, I agree with this comment. Like, Base 44 is for $80 million might be the best acquisition. Whoever is the founder of Base 44, like, talk about a fun. Like, I don't know what the circumstances were there, but like, why wouldn't you just wait a year and sell it for 500 million instead of 80, or wait 2 years and sell it for like 1.2 billion? It's, like, you know what I'm saying? Like, with the rate of growth that aggressive, it's just crazy. Thank you, Express Investing, for the 5 New Zealand dollars. All right, let's go into our Q&A. What is your long-term price target for Nbis? Will the new unrealized? So we answered the second part. Maybe we can just do the long-term price target. I have a $200 price target for end of 2026.
Yeah, I'm too new onto it to say other than up.
Do you have any? You don't have any price target, Roy?
No, too new into it. I have no idea. So.
Okay. Are we put off with a massive capex spend of Meta, Amazon, Google, and others?
Depends
You
on
wanna
who the
go
we
first?
is. Me, myself, and Tevis. I think probably most of us that are in this circle of creators. No, I do think that the market is perhaps close to its saturation point as far as what shareholders are willing to tolerate for capex. We'll still see it accelerate, but maybe not nearly as much as what we've seen in the recent past. A little bit of shareholder revote. By the way, it's good for a couple of things. And that this is how I'm positioned. Nbis, it's great for, because eventually these hyperscalers can switch over from renting from Nbis to like, hey, we're just going to build out it themselves. Are they going to do that in the current environment where there's massive pushback on them increasing capex? No, they're going to slow their roll and not do that, or at least not do that as much. Probably becoming even more reliant on the Nebiuses of the world. Aehr test systems is another way I'm playing it, just because they're positioned perfectly for what's happening in that space. There's a lot of other, Teradyne, if you like something that's a larger cap that's less risky, they've done incredibly well. I still think there's upside there. And then VG is the other way that I'm playing this too. That energy is really the big constrainer. And if you listen to these guys across the board, like for the most part, they're saying the same thing. and it's so important that they're locking up these energy contracts and also building out some of their own energy solutions. But LNG is just an easy way for that to develop. They're very well vertically integrated. And so, yeah, instead of saying, hey, I'm scared of this or nervous, well, the last is too, NVIDIA. I've added more NVIDIA. Now it's down from where I added. That's fine. I'm not buying for like 2 weeks. It's buying for the long term. But I think that they're all of those are probably winners. Now I'm probably wrong on one, but I think the rest of the three will do incredibly well. There's ways to play it beyond just being worried about that. Like, okay, since this is reality, what's going to happen?
Yeah, I think the question you have to ask yourself is, are you bullish on AI or bearish? Because ultimately the higher capex points to the demand being sustained, and that's going to increase the applications even further. It's going to increase, the capacity, and it's going to be bullish for, of course, companies like Nbis and Aehr and all these hyperscalers as well, right? So I think it's a validation of the demand for AI continuing to be strong into 2026 and beyond. And ultimately, I'm bullish on the AI trade. I'm, invested in the AI trade. So I think the capex is strong. The main question or the hesitation or the uncertainty from the market is, can that capex actually translate to revenue? And I mean, that's a case by case basis, I guess, on the execution of that company. But the demand is definitely strong. And for a company like Nbis, who's a provider of that, capacity from a data center perspective, cool, bring it on. Like, I would love more capex than was guided for, was expected, because ultimately it's going to lead to faster growth, and some of that is going to, go to Nbis. Okay, let's bring up this comment. $10. Got my first alimony check from the ex-wife for $1,000. Without thinking, what are we buying? Nbis is what I'm buying right now. Although SoFi at $19 was freaking compelling today, that's for sure. Roy?
Yeah. I mean, none of those are bad answers. NVIDIA, Robinhood, good opportunities, Aehr test systems. We talked about Duolingo. Just go with whatever your strongest conviction is. Maybe something we didn't name. You might love Crocs. Invest there, if so.
Yeah. So and thanks again for the $10, and good luck with the alimony. I don't know what to say. Okay, next question. Are there any buyers of SoFi? I have puts of $26 on SoFi. Franzi, a person after my own heart, because I just got my $30 put on me. Yeah, very much a buyer of SoFi at these levels, and I think they're going to do very well.
Yeah, I'll take that answer. Yeah, I've added some. I hadn't added SoFi in a long time, and I just added shares. So not this week, but last week.
Yeah, I mean, when I chatted, I have this clip actually, and when I chatted with Anthony Noto, one thing he said is like they're guiding for 35% growth in Q1, and then they have a guidance for 30% plus growth in 2026. But I think the caveat there that he said was he would be incredibly shocked and disappointed if Q1 was the highest growth quarter that the company had, even though their guidance is 30% for the full year. Which to me, if you're reading between the lines, it says that he internally is expecting over 35% growth for the year, or at least for the quarters following Q1. And if that happens to be the case, I think we're in a very, very good spot.
Yeah.
Let's go to the next question. Do you think Nbis is going to sign a new hyperscaler or just expand their relationship with the two that they have? Good question. Do you want to take that, Roy, or?
I think probably that they'll have additional just because of what's happening with CapEx. But for sure, I think an expansion at the very least, because you see that shareholder revolt against increasing CapEx like they have been. So I think that they'll have little choice but to rent for a while longer from Nbis. So that'll lead to expansions or new contracts. Either way, it's the same thing.
Ultimately, I think both are going to happen. I think, in my predictions video for 2026 for Nbis, I said that they're going to sign Google. I think Google is definitely a candidate for a hyperscaler deal. I do think that Meta is going to be the expansion, and because Meta was only $3 billion and they've already begun servicing it. So I think both of those things are going to happen essentially. Let's see. Are you full tech, or did Steve manage to make you buy tobacco and Pokemon cards?
Not full tech, but I do own a lot of tech. That's tech and growth is usually our position.
Yeah. Tech is the vast majority of my portfolio. Sorry, I'm struggling to like bookmark all these questions. You guys are asking them way too fast. And
we've got 10 minutes, so
I cannot bookmark anymore, guys. I just noticed I have 43 bookmarked. Are you guys crazy? Okay, 1 minute max, Roy.
All right.
Is AI the moat for Lemonade? If so, why doesn't a bigger insurance company come and implement it? This is like saying, like, why is SoFi going to eat JP Morgan's lunch? JP Morgan can do the same things, can't they? Well, they can in a perfect world. In reality, they're not going to. Why would you need insurance on Tesla self-drive? It's basically a legal responsibility. Like, you still need insurance even if the car is driving itself. So when you're enabling FSD, you're the one that's agreeing to essentially stay attentive. And I don't know how it's going to work for robo-taxis, but I'm imagining that Tesla is ultimately going to be liable. And so this insurance is going to be, it's a product liability in addition to being, a person liability. So that's why it's gonna matter. Roy, what's your PhD in? Do you want to answer or no?
Haven't disclosed, but it's close. I don't have it yet, but I've submitted my final dissertation as of this week. So defending soon.
Roy, what is your biggest position? So you love the company. Do you use the platform to invest and trade as well?
Yeah, my main platform, my favorite brokerage.
Why do you think $60 is the level? The volume shelf on Robinhood is around 50.
Yeah, like it can go lower. I don't want to get super greedy with my entries. I've done that before with Tesla, where I'm like, hey, it's going to fall to $100, and it fell to $101, and so I bought at 140. Which, hey, it's still great. Those are up massively. I have sold a lot of that position though, but I'm not going to just be like, you know what, I want the very bottom entry. It's like, no, a compelling screaming price with long-term horizons. That's good enough. It can go lower. That's okay.
What do you want by? I think we answered this with Mopar's question, so we'll skip it.
Yeah.
CRM. Now, are these or other SaaS interesting now that they've been hit?
ServiceNow is somewhat. CRM, I loathe, and I've been opposed to it for a while. It's ever since we had a discussion, like, I don't know, 6 months ago, and I'm like, hey, sorry, this will take just a little bit longer. My research methodology is rhetorical analysis as it relates to dissertation in a very different field. It's not in this. But one thing that it helps you kind of do is when somebody changes the way that they're communicating, verbally and non-verbally, and it's demonstrable, there's usually a reason for it. And we've seen that with Benioff. He seems a lot more desperate. He seems very focused on the competition, focused on the macro, focused on his multiple. Those are usually indicators, not always, but usually, and especially if you're looking at Benioff and his long history with the company, of weakness, significant weakness. ServiceNow is kind of interesting. I think that there's more interesting names like Wix we mentioned before. I think Figma is very interesting here. But I don't know. The easiest way might just be play it through an ETF.
Do you think Nbis range bound between 100 to 80 until a new deal is announced? Have you been considering covered calls? I personally have not been considering covered calls, and maybe it's range bound. But I do think that 108 is the technical level to break, and if we break 108 on the technicals, we're going to go much higher, probably to the 130. Like, that's from a technical perspective, but yeah.
Yeah, not tracking the stock nearly as much as Tevis, but stocks do have personalities. Nbis, I don't think, is a type that will get range bound.
No, and you got to keep in mind that since the earnings call, and this is also in a video that is going to come out in like the next hour or so, but you've seen a lot of institutions accumulating Nbis. It's actually over 53% institutional ownership right now. And institutions are wising up. Analysts are covering it more and more. Their price targets are predominantly positive. Like pretty much all the price targets are higher than where we're trading right now. So I think that it's definitely going to be in the hundreds this year. And my price target remains 200. So I don't think, I mean, it depends on the macro over the next couple of weeks, but I think it's going to be higher than where we are right now and not range bound. Was HIMS a cornerstone of your portfolio? Yes. I bought HIMS at 13. I built it up to my third largest position. And then I largely got out in the $50 range, wheeling all the way through. So collected a ton of premiums. I sold a small portion. Whatever my position was left, I sold 80% of that last week. Realized a loss on that. But if you put everything together, it's one of my most profitable trades I've ever done because I bought at 13 and I was selling in the 60s. So very happy with how HIMS turned out for me. Even though I'm holding a small portion, it's like 1% of my portfolio right now. And that's at a loss, of course. I think my cost basis is like 25 or something. I booked the vast majority of my gains on HIMS.
Mm-hmm.
If Canada and the USA face off in men's hockey, are you guys going to do a bet? Yes. Travis, why not Root? Root is an overall insurance company. I like the AI piece for Lemonade. Thank you for Aehr. Any thoughts on Toast? Looks ready for a breakout.
It's in payments. Payments is just a tough space right now. So I think it's a decent company, but yeah, I've never really felt compelled to own the stock.
Is Nbis a long-term hold for you? Yes, unless the story changes. Which company is going to pick up to their team?
XA.
Oh, yeah. Which company is going to buy? Yeah, I wouldn't be surprised if we see some of them end up at Meta for sure. Did we drop BMNR? No, we're both still holding BMNR. What are both your takes on Cloudflare? Very bullish Cloudflare. I've been hoping for 150. Let's see what it's trading at.
Dude, they had earnings. They killed it, and the stock rocketed, and I'm like so angry because it's always traded at a premium, and great companies like that will. They're incredibly well positioned. I like Matthew Prince as CEO. I think he's great. And that stock price, it starts getting down, and I start getting a little excited, and then something like this happens, and it just is off to the moon. So it's too expensive for me with all the deals that are in the market. I do want to own it someday. Maybe it'll fall to where I'm comfortable at some point.
Would you be surprised if Meta? Yeah. Yes, I would not be surprised. I expect that to happen. Any particular reason why you guys aren't on Zeta yet? We can't be in everything.
Yeah, that's the easiest. I think it's a good, but maybe not great opportunity. And I prefer to concentrate on the great ones. I may swing it, but I mean, I don't have a lot of cash right now, to be honest. So I have to focus on what is a screaming buy to me, and they're a good buy. If they were the only thing that fell, I would have a Zeta position.
Yeah. When will SoFi enter S&P 500? March, hopefully. Realistically, probably June or September.
Yeah, the market cap's kind of the issue right now.
I think
keep falling.
It can't fall below 1750 or something like that.
They increased it. I'd have to look to see what it is, but it's above 20.
Yeah. Who is this Tanner person? Not relevant for this podcast. How many actually log on to Duol to keep the streak alive and then sign out? That sounds like a lot of work for not a lot of reward. So I don't know. Bought Amazon pre-earnings. It's my only position in Amazon. Don't have enough cash to double down. Should I keep buying small amounts here? Don't want to overexpose myself to it. I mean, this sounds like a decision you make for your own portfolio, man. What I can say for Amazon, what I think is going to happen is I think it's going to probably sit around this range under 200 for a little bit. It has strong support. I think 188 is a level where it has strong support. And I could see it going higher into the second half of the year. I have spreads for Amazon for 2028, so I'm in the same boat with you. I wanted to go higher. I thought it was going to go higher after earnings, but I don't think like Amazon's already cheap. It's not going to go away anytime soon. It's a very good company. And if you're down 10% or 15% or whatever, it sucks right now, but just wait it out for 6 months and I guarantee you'll be fine.
They had a great quarter. AWS is reaccelerating. So I don't own it, but yeah. Do what helps you sleep at night.
Exactly. Thoughts on ALAB? I'm loading up on Palantir and ALAB in Q1.
I've heard of that one, Astera Labs. I just don't know. I don't really know anything about it other than just like little tiny bits of what I've heard. So sorry.
Yeah, neither of us cover it. Tevis, are you DCing into other crypto assets like XRP or Solana during this cold spell? No. The rule for Tevis going forward is only Bitcoin and Ethereum are my only two holdings for crypto. I sold off all my Solana at in the fall, and I bought Ethereum. I think in September or August when I did that, and I bought Ethereum, and that's it, man. I don't have the brain capacity to diversify even more in cryptos. So, Tevis, I believe you work in the design creative industry. I work in product management and in tech. Are you seeing any impact on jobs workflow? I know the ad industry in London is seeing a huge drop off in hiring, particularly entry level. Yes, I'm seeing people being actively displaced by AI. It's a reality of life. I think so. Here's what I'm seeing really quick, 2 seconds. The people on the tactical level, like individual contributors and creative folks, are being displaced in our company by AI because we can do more with less. However, we're paying more of a premium for decision makers from a product perspective that know how to leverage AI because they're better holistic thinkers and operators in general as a result of their ability to leverage AI at their disposal. They use Claude Cowork, they use Claude Code, they use all of these different AI tools, and they're more effective. So they're more efficient. We're actually paying more for those people. So it's more of a like yes, there is displacement, but it's more of a duality where like the people who can use it, we're actually paying a premium for, and the people who we feel AI can augment a lot of their work, we're getting rid of as some of those people because we can maintain the same productivity with much lower OpEx. Okay, super quick, Roy. Let me know, when you got to go. What's your prediction if the U.S. does a partial government shutdown again? We're going to go lower.
Yeah, initially it might do nothing, but if they think that it's going to be a long shutdown like before, that's when you'll see the market dip lower.
Amazon 250 calls for Jan 22nd. Am I cooked? Hopefully not. Hopefully not.
Yeah, that's
Tevis
aggressive,
never?
but I'm rooting for you.
Yeah, it's aggressive. Why is Tevis never in the center of the camera? It's because I have an L-shaped desk, and right here, like from here onwards, it goes this way. So this is like the desk digging into my side. Can Roy discuss Figure for a minute?
Yeah, I told Franzi I love to, and it's really interesting to me. It is in my target range. The problem is there's just so many opportunities right now. I am going to do a little bit of a collaboration article style. I need to talk to them next week, but I think that we'll probably get it out pretty rapidly on Figure. It's interesting for sure. And I've been digging this company for a while. It was my second favorite pick going into the year as an outperform. Even though I didn't own it, Aehr Systems was my number one. And initially it looked like, man, this thing is just off to the races. And I didn't chase it. It's now round tripped completely, which is actually kind of shocking, despite there not really being a credible reason for it, except for possibly something in the Clarity Act. I may even do a video here in the next 2 weeks or so. There's a couple more things I need to get up to date on Figure, but I think I'm there as far as comfort level and understanding where I can do a little more content.
I just saw a Figure, holy, from $78 down to $34.
Yeah, and you know why, Tevis? It's because it's related to crypto. Now, the funny thing is, they use crypto basically as their rails for everything. They have democratized Prime. They do these HELOCs as well. They have their yield stablecoin. And so really, like, there is some lending against crypto by some of their customers, but the exposure that these guys have to the actual price of crypto is insignificant. It really doesn't matter for the company at all. And I was kind of thinking in the back of my mind, I'm like, okay, Figure might be one of those that gets caught up in, if we're in a crypto winter, in an anti-crypto narrative until the market figures out, okay, this actually doesn't impact these guys. So here it's pretty attractive, but the thing is, like, sentiment can be sour for a while. And if we continue to see this next week, that crypto continues to fall or be in the doldrums, could we see Figure in like 25, $20 a share? Maybe. Like, it's very volatile. If so, at that point, I'm not gonna. It's gonna be just a stupid buy for me, and I'll just have to buy. But Here, it's very attractive, but there's a lot of very attractive plays.
Mopar, thank you for the extra $10, and congratulations on the Nbis purchase. Roy, is your price target on SoFi still intact? Just a yes or no?
I mean, in the current macro, no, but if it was a bullish macro, yes. It's just anti-payment, anti-growth for whatever reason. I think that'll probably change, but yeah, it had this been the time when I had to put out a price target, it'd still be significantly higher. But I mean, the short-term macro and sentiment influence price, we're seeing it right now. It's not because of execution.
If Steve was stranded on a desert island, could he survive on coconut milk? I hate coconut milk, man. So
that's not real milk. Yeah, that's fake milk. So no, he would die.
Biggest positions minus SoFi, I think Roy's is Robinhood.
Aehr Test Systems. Robinhood. Actually, SoFi would be number 2 right now, and Aehr Test Systems number 3.
Can you explain how early assign works when selling puts? Yeah, if it's in the money, they can just give you the shares and take your money, basically.
Even if not. Which it rarely happens. I do know somebody that it happened to like 6 months ago. Oh yeah, the options contract is a legal contract that allows you to, and you don't have to wait for the expiration at any time. Take ownership of shares at that set price between when you buy that put or all the way up or into the expiration date. So yeah, that can absolutely happen. The person on the other side controls that. It can also happen with covered calls. You can see that the other side of your trade, they can do early exercise. It's rare if it's out of the money, but it does happen occasionally. Usually there's something related to that somebody knows what's coming, or there's a dividend date or something strange. It's usually not worth doing early ownership, but there's a few rare exceptions.
Yeah, mathematically, it doesn't really make a lot of sense for the other person because of the time value. But I've been early assigned a lot, all the time, actually. And I think my broker hates me at this point. Okay. Maybe one more question?
I got to run. I'll do one last one, yes.
All right. Are you doing anything on margin?
No, there is a point if the market stays, but it has to get so stupidly rational, and it won't be a large amount of margin that I do margin. I did do some when Aehr Test Systems did their report. It fell to $20 a share. I'm like, hey, I've got funds coming in the week after. I'm not waiting. This dip might not wait around. Now we're at $30, and I'm no longer in margin, by the way. I do tend to use the $1,000 that Robinhood gives for free for margin. I'm not even using that right now, but it's there. Along with, I'm like maybe 2% cash to deploy. But yeah, that's one of the things I thought about is like, at what level am I comfortable taking on margin and how much? And it won't be a huge amount of my portfolio, but it might be basically what I expect to be getting into the market over the next 6 months.
Thank you, everybody, so much for watching. Sorry if we didn't get to all your questions. This has been the Bootleg Weekly on a Friday. We'll be back on Tuesday at our normal time. And I have a video coming out in an hour, and follow us at 9 p.m. on our stream with Steve. And I think we're also going to have Matt. Roy, unfortunately, cannot join us. Thank you all. Love you all. Bye-bye now.
Later, guys.